Hi traders, welcome to the LFB and our global video charting review of the commodity markets. This is for January the 31st, 2011. Global commodity markets found buyers in the previous trading session and continued the positive momentum into Monday trade. Fears over rioting in Middle Eastern continents have led to support on gold, silver and oil prices. The impact of soundbite news headlines cannot be ignored, with a reversal of recent highs on the global commodity market showing that gold investors, silver investors and oil investors continue to be happy to buy the dips on the three major commodity markets. Gold bullion signaled short on January the 19th. If we take this chart back to a 4-hour view, well, we'll leave it on a 1 hour with a 4-hour overall signal review here. We had a signal on the 19th of January to go short from 1370 with an initial target of 1335. A failure to break long back above the 100-day simple moving average led to another short signal which came through on January 24th. That was targeting 1310. Now, a long signal came in Friday trade, and we can close in on this to see this a little bit cleaner. We got a long signal on Friday trade, but that was very violent, very volatile, and very difficult to follow through with. That break above 1328 was the instigator, but that's been unable to really complete its due course, and gold trade is back to the neutral swing point around the 1330 area. Gold's consolidating around that neutral swing point, and no new signals on the horizon for gold bullion trade, either long or short. It's becoming a very tight channel on gold at 1350 resistance, 1300 support, and investors will be probably well set in just letting this play out. If you're not back in gold at the moment, you're holding a potential gold position, but you're sitting in cash, you might want to wait for the next 4-hour signal to come, which we will highlight on the videos for you. Silver markets followed gold bullion in a reversal off yearly highs in January and have signaled on the same days as gold, both long and short. So we've got no divergence in the gold and silver markets. They are moving as one. Silver does look a little bit more bullish. The initial signal lower on silver came on January the 19th, the same as gold, and that was from 28.50. That did run through its due course, hit the target at 27.50. A second signal going short after the recycle. We got a second signal going short at 27.50. That completed its target at 26.50. Most of these silver targets are about $1, which is a 3% move on the silver markets. Unlike gold, silver signaled long on Friday with a sustainable move. Gold was just one 1-hour movement. Silver signaled initially from 27.20, hit the target overnight, which was the 28.20, which is the 20-day simple moving average. But silver was able to be traded. Gold was a little bit volatile. That upside target of 28.50 now is the new breakout point on silver, but you're probably going to be looking for a recycle back, test support at the neutral swing point 27.50 and get a new signal bounce from there, rather than just trying to buy the breakout, which won't offer as good a risk to reward and money management potential as waiting patiently for a recycle. So silver markets, very similar to gold. They do look a little bit more bullish at this point in time, and it does look as though silver has got a stronger potential upside than the percentage moves in gold at this point in time. Looking at the oil markets, West Texas Intermediate, we use this instead of Brent crude or some of the other oil markets, which probably have a stronger institutional link, but West Texas Intermediate is the most highly traded and most liquid of all global oil contracts. Signaled short on January the 20th, which is close to the signals that were given on gold and oil. So if we go back to the 20th, we got a short signal on oil. It is delayed compared to the silver and gold signals that came the previous session. The short signal was from 91.50 on West Texas Intermediate and recently completed its target at 86.90. That was the short side target on oil. A new signal hit in violent fashion on Friday, the same as the gold signal that was strong. This oil signal hit in a very violent reversal, but like silver, this one was tradable. And that long signal came with a break above 86.50 that initially targeted the 50-day simple moving average at 88.90. Oil trade remains in long mode and looks more bullish than both gold and silver in the near term. The 20-day simple moving average at 89.70 is now where heavy consolidation's taking place in oil trade. A test of support at 88, which is the neutral swing point area on oil, would then allow some new fresh momentum to come in, and that would be in line with the S&P 500 dropping down possibly to potentially try to test that 1255 1260 area. But as the session unwinds on Monday, it does look as though the bullish side of equities, the plunge protection team, are in to limit the damage from regional sound bites, and it does look as though Monday will start with a fresh long momentum in equity and commodity markets.